Hello friends, today let's talk about Action Construction Equipment or ACE, the Indian leader in cranes and construction equipment, and a stock that's been making big moves. Let's see what their numbers really say. Let's start with sales. 10 years ago, ACE had 616 crores in sales. This year, that number has shot up to 3,245 crores. That's more than 5 times growth, or about 19% compounded annually. If you zoom in, the last 5 years saw an impressive 24% per year, and in the last 3 years, 27% annual growth. Even in the latest year, sales are up 14.18%. This is a true high growth story with almost no big dips. Steady and strong demand for construction and infrastructure. Now, let's look at expenses. A decade back, expenses were 591 crores. Now they are 2,745 crores. Material costs are the biggest chunk, usually 68 to 73% of total spending. Manufacturing and employee costs make up about 4 to 9% each. Other costs are kept under 13%. What stands out is that company keeps cost aligned with sales, letting margins improve as revenue rises. Let's check out operating profit. Operating profit climbed from 25 crores 10 years ago to 500 crores now. Operating profit margin is up at 15% this year, compared to just 3 to 8% a decade ago. For every 100 rupees earned, 15 rupees is left after cost, a great sign for a manufacturer in a competitive sector. Now, let's look at net profit. This is where company shines. Net profit grew from 3 crores to 423 crores. That is an unbelievable 56% annual growth over 10 years. In the last 5 years, profits compounded at 51% per year, and in 3 years, 57% per year. Even in the most recent year, profits are up 23%. EPS went from less than 1 rupee to over 35 rupees, a huge win for shareholders. Return on equity is 29% for the latest year and averages 20 to 29% over the decade, a mark of a truly efficient business. The company pays out about 6 to 10% of profits as dividends, so the yield is modest at 0.18%. The real returns comes from growth, not payouts. Debt is almost nil. The debt to equity ratio is just 0.01. So company runs its business with almost no loans. ROCE is even better at 40.1% in 2025. So overall, Action Construction Equipment is all about fast, steady growth with strong profitability and almost no debt. They consistently ride India's infrastructure boom, show off top-tier returns, and reward long-term holders with multi-bagger gains. If you want a business that grows fast, manages cost well, and doesn't take on extra risk, ACE is definitely one to watch. If you like this breakdown, subscribe to Wealth Growth Club and drop your next topic for review.